Welcome back. It is time to battle it out in our Bull versus Bear segment for the week. This week, we put the spotlight on Meta. Needham Senior Analyst Laura Martin has an underperformed rating on the stock, saying costs will exceed revenue growth over the next 2 years. Welcome, Laura. And we've also got AB Bernstein Senior Analyst Mark Shmulik reiterating his outperform rating, saying he sees light beyond the dark. Welcome, Mark, as well. Okay, so let's get into this. First and foremost, we've got to talk about the advertising revenue right now for Meta platforms, especially as so many companies are pulling back on some of their ad spend, really looking at some of their cost restructuring as well. And so, Laura, I want to go to you first on this. As we see even more of that demand for digital advertising continuing to, unfortunately, see this vacuum given the restructuring that many companies are doing, what does that mean and net out for what we should expect going forward for Meta platforms and the underlying subsidiaries in Facebook, Instagram?
You're right. The macro environment continues to deteriorate. We think many ad-driven companies will miss their fourth quarter earnings. And in Meta's case, not only is just the macro environment deteriorating, but they're losing a lot of user time to TikTok. And that continues to happen. TikTok now is up to 75% share of adults under 25 here in America, which is the highest ARPU region for Meta. So we're worried about both ad unit availabilities as people move time into TikTok, and we're worried about demand softness at the advertising level. And 100% of Meta's revenue comes from auction. So if you have falling demand for units, you get lighter pricing for the units that you do have to sell.
Mark, I want to get your reaction to that. I mean, you're calling this a make or break quarter for Meta.
Absolutely. And I think Laura's right that there's certainly all these, the very loud bear case right now where, it is time to prove it, even in this tough macro environment. And, there's really kind of three legs of things that they need to go off and, effectively dispel. One is on the engagement side. And, since they had that for one quarter where they lost 1 million users, they've gained about 40 million Facebook Blue users. Now, granted, much of that's international, but domestic's held fine. On the revenue front, it is a tough macro, but, we're seeing them actually set up a little bit better. Actually starting to gain back some share of wallet from advertisers, primarily as they've made some improvements on the IDFA front. They've launched Advantage Plus, which certainly helps a lot of advertisers, make decisions around kind of automating the ad delivery process. And they've launched a lot more ad inventory, ramping up advertising load on Reels, launching new ad inventory elsewhere. And so, we're starting to see them make progress against much that's been weighing down the stock since the end of last year.
Mark, I want to stay with you for a hot second. The reality of the revenue construct for Meta, especially as they make a big push into the metaverse. I mean, my goodness, are we going to be buying $1,400 glasses to wear, augmented reality glasses to wear within our households or even at work?
Who knows? I bought one. I'm not saying everybody else will, so I'll try it out. But, I think where we are right now, that certainly captures the headlines and certainly the number that they've been spending, to kind of build out that their metaverse ambitions is certainly kind of sticker shocky.
Why they changed the whole name?
Exactly right. But I don't think that matters right now for the stock to work, right? Because I think the stock is back to questions around really core fundamentals. Folks can understand, that that's like a more long-term initiative. I imagine investors would love it if they were spending a lot less on it. I think we're going to see some of that discipline. They're not going to abandon anything at all, but you'll certainly see discipline that, investment in growth areas is going to be tied to core performance. And so I think investors do need to see that discipline. And so long as engagement is holding and revenues are turning the corner off the bottom, I think they've kind of will allow them to continue to kind of build up, even if it's not necessarily desired. But, it's certainly a longer term view for sure.
Laura, you've called Meta CEO America's CTO. So what do they need to get right with the metaverse for that to actually hold true? And that figure is Mark Zuckerberg.
Yep. So we need to make a distinction between the stock call, which my attitude is, why would you ever invest in a stock where you're spending $10 billion a year, but the payoff is in 2030? You should go sit somewhere else. Energy is fine with me, or banks, don't care. Those are all fine, but do not sit in a stock that pays off in 2030, which is the stock call. I think what he's talking about in terms of changing the world of computing for consumers is really innovative and interesting and risky. But bringing on the CEO yesterday of both Microsoft and Accenture, great. Says he's got some great enterprise partners. And I don't think consumers want to pay $1,500. I think that's the exception. But I think Accenture could buy thousands of $1,500 goggles. So I think it's interesting what he could do for America and for the consumer over a 10-year frame. Having said that, I would say that, we would move to the sidelines and use Meta as a source of funds, because that's no place to be as the return on capital deteriorates. Just
as we wrap up this conversation, I want to get both of your kind of biggest risks for Meta. And I mean, if I'm kind of bringing myself into this conversation, it really is who that consumer is, because it's about the time spent on these platforms and engaging even with the hardware that they decide to move forward with in order to make either the metaverse real or to just drive up engagement in the screen wars, if you will. Laura, I'll start with you.
I think Mark Zuckerberg is telling us he doesn't think he has a core business. He is moving to Reels because it competes with TikTok. He is moving to the metaverse, and he's changed the name of this company, which tells me he doesn't think his core business that he built 15 years ago is actually a business anymore. Otherwise, why would you do these two things at once? Take on an extra $10 billion a year in metaverse spending in the midst of a recession in the ad market on the revenue line. So I think the big question here is there a core business at Meta that can persist and has an exit multiple?
Mark, what about you?
Yeah, look, if you take a look at the motivations behind it, we've gone through these changes in the past from desktop to mobile. Mark and the team over there at Meta certainly remembers that well, with the existential questions of, should they build an app and participate in that ecosystem? And then in the meantime, they've been hit by changes that Apple makes, the gatekeepers in this current environment make. And so they understand that at some point, there's going to be another computing platform change. They don't want to be stuck in the application layer. Now, I don't think that is a signal that the core business is certainly kind of, expiring or anything like that. Now, there is certainly this bear case that at some point, social media does go the way of MySpace or Yahoo, but the data's not.
But is it all social media that goes the way of MySpace?
No, it isn't. And I think, we miss, kind of sitting here in the West that, abroad, Facebook is internet. That's how people access it. And if you kind of take a look at the global charts of who's downloading new apps for the first time, Facebook and Instagram are right at the top. Now, granted, a lot of that's international, but it's still massively growing. We're still growing global internet penetration, and Facebook remains the portal for how you access it. But, I don't want to fault the company for figuring out that if you're Apple sitting here, we should try to build an iPhone to kind of, participate and own the next new thing. I understand the motivations behind it. It's a long-term view. Doesn't mean that there's any issue. We still use desktops. So I don't think there's anything to kind of suggest from that investment, aside from perhaps the magnitude, that there's any issues with the health of core.
All right, we got to give you the gong for the Yahoo ding there. All right, Laura wins by 2 points. Needham Senior Analyst Laura Martin and AB Bernstein Senior Analyst Mark Shmulik. Great to have you both here with us today.